Welcome to the lesson of the day, and it's going to be day 2 news plays. So everyone gets all excited when there's a big news event, and the stock goes up, stock goes down, it goes absolutely all over the place. You're like, hey, extra volume, extra volatility. Boom, we're going to be all over it. We're going to have some fun. And then the next trading day comes in, and you want the shiny new thing, because that's how we are as human beings, right? Give me the shiny new thing. I always want to have what's the next big trade or whatever it might be. If you're looking at like one day it's AMD and the next day it's NVIDIA and the next thing it's SMCI. However, there are times when if you were looking at something that had enough of a catalyst to give you a big volume spike, to give you a big move, you don't want to get away from it the next day as a trader. Why? Because the opportunity might still be there. And it might be a big opportunity, or it just might be an easy opportunity. And when I say an easy opportunity, I don't mean to tell you trading is easy. It's just that the read of the movement can be easier because the news event has given you a lot of good information to deal with. So the great thing and the reason why I'm doing this lesson is because previous day, yesterday, we had Apple in the afternoon on some robot news. I chuckle because everyone keeps thinking it's going to be a vacuum, but that's clearly not going to be the case. So you had Apple in the news. That was fantastic. Boeing had a big news move as well. Disney had its shareholder vote. So you had a wealth of names that set up some day 2 type of plays. And what you want to look for in a situation like this is, okay, first thing, did it matter? Right? Because if the news didn't matter the day before, then who cares? Right? Let's be real for a second. And so when the news dropped of Apple, and we'll start with that example, when the news dropped, did it do something significant? I mean, it ran the high of the day, had the biggest volume spike of the day at that moment. Let me actually just go up. Biggest volume spike of the day, so that's a big check of the box. Did it have a big move? Well, okay, it ran the top and then flushed about $1.50, so the entirety of the afternoon range got taken out. Then it even rebounded all the way back to try at the close to get back to the break even where it was when the news came out, and right back into a double bottom. So volatility increased in a heartbeat. Volume went through the roof. So that's going to check a major box. So what can you do with that? I say this on Fed days. I say this when you have an 8:30 number, like a big jobs report or the CPI. When you have a liquidity vacuum, and that's what happens, that's what causes stocks to move like this when there's news, is you get a liquidity vacuum, then all of a sudden it'll just increase volatility. Where do the algos and where do the market makers want to come back in? And then ask yourself if that's going to help you. So very clearly on Apple, you had a ton of activity as it broke down through 170, and then as it resisted 170. You then had a bunch of support at 169 to 169.5, like down in this range. So those are your areas of interest. This is where people are making markets. That's where decisions are going to get made. When the news is bad, sellers are all about the 170 and worried about this 169.50 holding. And the buyers are happy that there's support down here, both from the morning and then in the afternoon. So when you come to look at this in the next day of trade, it'd be easy when it's holding out here at 170.20 to just say, well, if it breaks out yesterday's high, go long. You know, that's a very standard play. If you weren't thinking about the news, you might just allow it to break this top and go long. You'd be long in the pre-market if you did that, or maybe you'd wait until 9:40 to make your trade. However, remember the key price levels. It rejected 170 twice on that news. You're now gapping the next day and holding 170 in the pre-market. When you hold that level, that is one of your 2 key price areas to trade. So when it dips down in, look how quickly it bounces off that 170 level when it gets down there. And then to boot, remember I said about the high of the day break, well, what happens if it starts taking out resistance on the way? Does it hold the next resistance up? This is where it broke, and this is where resistance was when the news broke, 170, 30, and 40. It then holds that off VWAP. It then breaks yesterday's high and holds that again off VWAP. So essentially, all you had to do on the day 2 play is observe. Is it gapping up? Answer yes. Is resistance turning into support? Already happened in the pre-market. It dips into that price. Resistance point 1 in the afternoon, bounce. Resistance point 2, bounce again, and then it goes off to the races. So in this particular case, it was in play, but it went the other direction. It wasn't even with the direction of the news, but the levels that you're trading off of are clear as day because you paid attention to those liquidity gaps. And I said there were multiple movers. Boeing also was in the news for all the wrong reasons yesterday. And I'm not going to try to spin the story. It's actually going to be up today, but I'm not going to spin this as good, production down, and it absolutely craters. It broke a flat bottom here at 187. Like, that was the big event. There's your 187 breakdown. Now, it was at 188. There's your next level when the news hit. So this is when the news hit. It was at 188. This is where the happy stock was. It then broke a 187 support level. It tested back up to 188 and absolutely cratered. So at the open, what can you expect here? In this particular case, it was gapping up too far away from any long bottom opportunities. Like, the same thing in Apple would have been looking for bids in the 185 range if I was trading it the way Apple was. So without the ability for the long and knowing it's going to be in play, well, it's set up for a short back into that 187. You just had to wait for it. At the open, it wicked the top here, couldn't break 87.5, which is this support in there. You short it back through 87. It ends up not following through down to 85. Now, obviously, I left something on the table, not getting out 85 halves, holding for 85. Trail out at the time, I actually thought it was a bad trail out when I took it. It ended up being a good one. But look at where this triple top is now. Is it a coincidence that we're getting right into that breakdown point and you're unable to punch through? So once again, it's that liquidity vacuum. You wait for the prices where everybody seemed comfortable to make a market before the news. When after the news and it was bouncing and ripping off the bottom, that's where the sellers jump right back in, the same place where they were comfortable making a market. And if it gets there the next day, you almost think of it like when a small cap gets into one of those bag holder zones. And you've all seen that before. Like, I'm just going to say sundial because whatever, sundial. Like at one of those weed stocks. You see something that's been down for weeks upon weeks and months upon months, and then it has a 3-day spike on news into a level that everybody's been waiting for the last year for it to get back to, because that's where it had like a wall of resistance. And that's break even for a lot of people that got trapped into it. You're going to get a lot of sellers in those zones for obvious reasons. It's not dissimilar with a day 2 news play on a more substantive stock, like a Boeing or like an Apple. When it gets to that level, probably a lot of transactors that are day trading swinging at those prices. So that's where you want to try to wait for it. Boeing, it was a bit of a different story from Apple in that Apple showed you the levels and then gave you the long off the bottom. Boeing rallied as well, if we can come back to the chart, and it would be easy to, in hindsight, to say, well, it gapped up the second day. Why weren't you just long? Because it didn't really set up. Like, if the long showed me that down here at the 185 would have been the important price, these are dark pool wicks. Really, you're trading up here at 185.8, 186 would be your entry price. It's a little bit far away, especially when your low yesterday was 184.20. It's a difficult structured trade. Ultimately, risk to reward, in hindsight, it looks good. But you can take the short with a little bit more confidence in your levels as it pops up into it. And it's just about setting up trades. Everything in trading is, why am I looking at the stock? Where do I want to get in? What prices am I executing? And what direction do I want to go? And then from there, you just execute the trades. Well, the first part of that's already done for you when you have a day 2 news play. You already know there's action on the stock because there was significant news the day before. So listen to those levels, and you'll notice most times I'll pull up daily charts and a 15-minute chart so you can see where the stock has been. In this particular case, I don't care. I'm only looking at the significant levels when the news came out the day before. That's how specific this play is. So the next time you get a massive volume spike on a stock that you know, you love, that you trade, pay attention to those key levels. Have the patience to wait for the setups off of those levels and then just sort of hammer in when you get that opportunity. Do not assume that just because it's yesterday's news, it can't be today's trade. That's your lesson of the day, and that's the real deal.